All right. Hello, everybody.
Yes.
This is Ignatius L. Jackson, CPA, and my wonderful co-host, Eric Pierre, CPA.
Hello, what's up, everybody? I'm back in the Valley of the Sun. On my way out of town again.
We are here live at my office and wanted to go through some year-end reminders as our last episode for 2021.
Can you believe it?
Yeah, I know. You want to reflect a little bit on the year since we're
man, what a year. What a year. Oh, well, we started this show. Thanks for moving that. Ignatius moved my drink to make sure it wasn't blocking the microphone. Thank you very much, Ignatius. We had to. I think my favorite episode was talk about the tax law. Because I have my pet politicians, and I enjoy, roasting Senator Warren and AOC, and those were fun targets, for me.
It was.
Especially AOC's hypocrisy. She wore that dress that said tax the rich, but she was hanging out with a lady that was African American dressmaker who owed taxes. Number one. Mm-hmm. Number two, wouldn't even pay her Black employees. And yet she's wearing this dress that says tax the rich, and we have half the people in the industry tax Twitter eating up. Oh my gosh, this is so cool. It's like, no, that's so stupid.
Exactly.
Yeah.
Exactly, my man. Jeez. Yeah, it's been an interesting year. It was a tough year, I think, for both of us in terms of all the changes and everything we had to deal with. Dealing with PPP, still dealing with PPP forgiveness for some of our clients. So it's just been a crazy year. And so glad to say that it's close to being over. Although, we're heading into another year of dealing with the coronavirus. So we'll see. Hopefully they don't get this new bill passed, the Build Back Better bill.
Manchin said he wasn't supporting
it. That was just this morning. You're correct. You beat me to the punch. I was going to say, Senator Manchin basically came out and said they're so far off that if you read through between the lines a little bit, that there's no way he's ever going to be able to vote for this bill. So hopefully that means it's dead. It won't see the light of day, but who knows? Things always change in Washington.
It may come back. So, and hopefully in more sensible manner, but we'll see.
So, and as a reminder to our listeners, I do believe that Eric made a bet earlier this year. We never did confirm it, but he definitely was pretty strong about the capital gains rate going up before the end of the year. So, doesn't look like that's going to happen.
Yeah, looks like I got to sell you $100, huh?
No, we never officially made it.
Oh, okay, we never officially.
I'll let you off the hook there.
Man, Manchin ruined it for me, man. Man, I was looking forward to taking your money. Man. Yo, Joe Manchin, you're not a team player, man.
Yeah. So yeah, looks like we'll survive at least another year. Who knows what happened next year? And frankly, I mean, they could still, although it's a slim chance, they could still make something retroactive if they were to pass a bill next year, but I certainly hope they don't.
The backlash, the political backlash.
Yeah.
You know how many people's careers would be over if they did that?
Right.
They can only do it prospectively, even though they have the congressional authority. But I don't think we've ever seen anything where they would do some retroactively to lower taxes or tax favorable, like unemployment, like they did earlier this year. When you talk about raising taxes, that I don't think has ever been done in the count to apply to the previous calendar year.
I hear you.
Now you could do it. They could have done it, passed it now, and apply it, like in September, like they wanted to. But I think Congress is recessing this week, aren't they?
I think they're done. So they're basically done for the year.
Yeah.
With the holidays, I think they're taking the rest of the year off. So there's definitely nothing that's going to get passed before the end of the year.
Do those guys do any real work?
What do you mean? Getting paid to?
You get paid. How do public service get private jets?
That's a great question.
Yes, I'm talking Nancy Pelosi. I mean, some of us earn more than her. We don't have private jets like that, so I don't.
Yeah. It's pretty interesting.
It is quite. It's quite interesting, isn't it?
Okay. All right. So yeah, just wanted to kind of give you guys that quick update on the bill that we've been talking about for months now, and hopefully it doesn't see the light of day, and we can go on with life as usual, back to hopefully some normalcy, and hopefully we'll have a normal tax year this year with not a whole lot of changes, but we'll see. We'll see.
That would be nice to have a normal April.
Wouldn't it?
Not to do taxes in May, July.
Yeah.
So,
all right. So, we wanted to, this episode on the CPA Huddle, we wanted to go ahead and give everybody some year reminders, some things to kind of think about and consider.
Absolutely.
As we approach the end of the year, since this will be our last episode for 2021. And so just wanted to kind of go through a few things. First, let's talk through S corporations and some of those important year end reminders for that.
That's cool.
A very utilized strategy, somewhat, I would say, underutilized in some cases, but some people definitely are missing out on the opportunity to be an S corporation. But if you do have an S corporation, and it's funny, I go through so many consultations, and whenever I ask someone, do you have a sole proprietorship or an S corporation? You know how many times people actually know? They don't, until they actually send their tax returns to me. I'm like,
oh my god,
how do you not know how you get taxed?
But yeah, people seem to know, but they seem to know what car they drive.
Yeah. So anywho, so if you have an S corporation, all right, for your business, something that you want to think about and consider is making sure that you have some W-2 wages for the end of the year, okay? And not only some W-2 wages, but that the wages are reasonable based on any number of factors you want to consider, but certainly in relation to your net profit as kind of an initial guideline. And then there's other factors as well besides that to think about, like what type of activities you're doing inside the business, et cetera, et cetera. But it just needs to be somewhat reasonable. It's definitely better to have something than nothing.
Yes.
But don't be too aggressive is my one word of caution there.
Yeah. Definitely consult with your tax pro about that. Especially for those of you that live in California, keep in mind this is really important. Because if you have a corp in California and your corporate profit is above 50,000, you have to pay 1.5% above 50,000, every dollar above 50,000. So you may want to get that last W-2 in to lower your profit, because if you make a profit, say 150,000, you're paying extra $1,500 to the state for no reason. So there's something you may.
Good point.
Yeah, something you want to look into. I'd rather pay myself than pay the state of California any day.
I don't have too many taxpayers in the state of California as
well. We still do, yeah.
But yeah, I know you have an office there in San Diego.
Yes,
so
we
that's
do.
A very good point.
Yes, we do, and we have a place in LA. Don't forget that.
Hopefully, most of your clients end up moving out eventually.
We'll see. Listen, last year was the first. Last year was the first year of negative growth, right? It was. And residential net growth. And I'm sure this year again will, a few more years, there'll have to be some tax reform at some point.
You would think so. But hey, who am I? All right, S corporations as well. Make sure that on your W-2, if you want to get reimbursed for your premiums for medical or healthcare, premiums, you want to make sure that is listed on your W-2 as S corporation healthcare premiums, because it has to be listed on there as additional wages. And then what you do is you take a deduction on your personal return when you do your 1040 tax return for those healthcare deductions. So something to make sure you keep in mind. And also remember, you do have to actually reimburse yourself if you paid for those premiums out of your own pocket instead of having the S corporation pay for the premiums directly. So 2 things to kind of keep in mind there.
Okay.
And the last thing I'll mention in relation to S corporations, that's really important, is on your final W-2, you want to make sure, or your final paycheck or whatever you want to call it, okay, but definitely on your W-2 that gets filed with the IRS, it needs to show any 401k contributions, okay? This is whether it's pre-tax or Roth, all right? It has to show those employee contributions on your W-2, otherwise you don't get credit for them. So just something else to kind of keep in mind, okay? All right, I don't know, anything else you think of in relation to S-Corps that's important to get done before the end of the year?
If you don't have a 401k or a SEP or defined benefit plan, that needs to be papered by the end of this year.
The 401k, yes. The SEP you can actually do after the year.
No, I said no, it has to be papered, not funded, papered.
No, you can actually.
If you have a brand new one,
you can actually paper a SEP as well. Yeah.
Oh, okay, you can paper.
Yeah.
Okay.
That's the one exception to having it done before the end of the year. But the 401k plan, you're absolutely right. That does have to be papered.
If it's a 401k, it has to be papered.
Right. And when we talk about 401k, we're also talking about, just keep in mind, right, at this point, a solo 401k. It's too late to do a safe harbor 401k if you have employees. So really what we're talking about is a solo 401k where it's just for the owners. Those are pretty easy to set up. And so that's why there's still time to do that. And if you have a significant profit in your business and you're trying to decrease your tax rate a little bit, then doing a pre-tax contribution to your 401k could be the right answer for you.
Absolutely.
So, something to think about, like you said. Okay. SEP IRAs, but to his point, you can, set those up still, but you do have a little more time to set up a SEP IRA to get that both set up and funded. It does not have to be done by the end of the year. So, but 401k is very important. Okay. What else? Let's see, what do we want to talk about next? Backdoor Roth IRA. Let's touch on that one. So even though we think that the Build Back Better bill or the Biden tax plan, I really should stop calling it that because I can't stand that name.
The triple B's. Oh, come on, man. Call it triple B's.
Oh, the Biden tax plan, even though the Biden tax plan seems to be dead, and so something that we're not going to have to worry about. There was a provision in there that said the backdoor Roth IRA was going to be dead after 12/31 of 21. So if you want to be safe, in case they do somehow manage to pop it out and make it retroactive, I would definitely recommend going ahead and funding that before 12/31.
Yeah.
Okay. And when I say fund it, I mean the steps to do a backdoor Roth IRA. There's a couple of steps there. So you have to fund a traditional IRA as a non-deductible contribution, and then you have to convert that to the Roth IRA. So it takes a little bit of time to get both of those things done. So make sure you don't wait till the very last minute to do it, is all I'll say there.
Okay.
If you're trying to get it done before the end of the year, to make sure that you're protected. All right.
There you go.
All right. Let's see. What else? Want to talk about 1099s?
Yes. Yeah. Get your W-9s, ladies and gentlemen. Do not wait till next year. I think they're due is it January 31?
January 31st. Yeah.
January 31st. Look, today is December 19th. Before you know it, you're going to be having New Year's Eve, partying. You get back to work on the 3rd, and all of a sudden scrambling to get people to give W-9s last minute. Not a good idea. Get them now. Yep. And actually, the best thing to do is whenever you pay a contractor, ask for it before you make your first payment, and keep them in an online folder so that you're not scrambling. Because even me, the accountant here, I've had to scramble to find one or two every year, and it's annoying that we usually forget somebody. But it's and another reason why you want to have these things. If you're ever audited and the IRS sees that you're paying a contractor and you did not get a W-9, because remember, W-9 can be filled out to where you don't have to issue a 1099, but if you didn't even get it, they can disallow that business expense.
Yep.
Right off the bat.
Yep.
Even if it's legitimate because you didn't get that paperwork.
Exactly.
And I've seen it happen to somebody that was not a client of mine that lost out like a $50,000 of business expense. The IRS is that serious about this.
Yeah, it's the burden of proof is on you. You got to be able to prove that you did your due diligence. You know who you paid. Like he said, though, just because you got the W-9 does not mean you have to send a 1099.
Right, because they're a corp, you don't have to. If they're taxed like a corp, you don't have to issue one. I mean, we issue them all so that we have a clean record on file with the IRS, but you're not required to for people that are corps.
Right.
But yeah, you want to get that. You don't want anything disallowed over that.
Yeah. I would not recommend issuing them for people you pay with credit cards, though, because the credit card processor
is supposed to issue the 1099K.
Issue a 1099. So if you issue one and then they issue one, it's like
double counting
for that person, and that's not the correct way to do that. But I agree with him. If you want to just send it to all the corporations, even though you don't have to, that's perfectly fine.
Yeah.
As long as you were paying them with like cash or ACH or Zelle or Cash App or any of that stuff.
Well, the people I pay, they got paid with cash, with Zelle,
wire transfers,
ACH. We had to do that. We had to do the heavy this year. They used the heavy stuff. I mean,
So yeah, very important to not forget about those 1099s.
Yeah.
So, okay. And I will say as well, just as a reminder, we talked about this a little while ago, but they did change the rules on who's required to send out 1099. So chances are, if you haven't been getting them, you're probably going to see a lot more of them starting to come this next year, because more and more places are actually required to send them now, including some of the credit card processors and things like that, who historically only sent them if you had
like
some massive amount of transactions, some massive dollar amount. They decreased those thresholds. So chances are you're going to start to receive a lot more of that.
The IRS is interested in being in your business. That's what we're telling you.
Yep. All right, let's see. What else? Let's talk about prepaying expenses and buying crap that you don't necessarily need. What do you think? Is it a good idea to, go buy a new car at the end of the year?
I mean, if you actually need one.
If you actually need one, exactly.
Yeah, I mean, you shouldn't buy one. I mean, are you going to buy me a car?
No.
Oh, man.
What?
Man, I'd take you to the Mercedes dealership. I like their, those AMG SUVs look pretty good. Especially, imagine my 6'8" frame, man. Rolling down the street, preaching low taxes.
Oh my gosh.
This guy on some 22s, man.
This guy is a joker. Oh my gosh, that's hilarious.
Well, okay, but if a nation's bought the vehicle, I couldn't get the tax break in that scenario anyway. So I'd be better about it myself. But
yeah.
But OPM anyway. Yeah, I mean, and remember, so you do have until 12/31 to buy a car. Okay, of course, good luck finding cars this year.
Exactly.
Man, we drove by the out here in Scottsdale. We drove by the Mercedes dealership last night, and all they had left was like 10 G-Wagons.
Only 10?
Yeah, I was shocked there was even 10.
That seems like a lot, actually.
Okay, but I'm just saying you couldn't even find a, someone like me. I was thinking, what if I'm looking for S580? Couldn't get one. I could have been willing to take an S580 drive back to Austin tonight.
Must be nice.
Must be the money. Hey, for that tax break, it probably is nice. Don't have to pay any tax on the money I made.
Okay, fair enough.
You should do cash flow analysis with your tax professional. And by the way, if you do buy a car, you have to do it based on the business usage. I'm getting tired of these TikTok people who go online and say you can buy a G-Wagon, and I joke around about these nice cars, but you actually have to use them for business. You can't just use it for personal. Claim 95% for business, because the IRS will check that, especially if you have a tiny business and you put a $100,000 car on that.
Yep.
That dog ain't gonna hunt, man.
Exactly.
Yeah.
Exactly. So,
but good luck trying to find a car right now. Oof.
Yeah, be careful with what you're doing with this stuff. Like you said, those TikTok videos are not giving you the full story and not giving you all the information you need. So,
well, apparently 1 out of 4 Americans now getting their advice from TikTok. Financial advice. That's scary.
It is.
Yeah, and I mean, there are some good financial professionals on there. Like, I don't know him personally, but I know Duke Moore has a good page.
Okay.
I don't know if you know Duke.
I've never even.
He's a black TikTok, EA. So he'd been on. No, he was on Good Morning America earlier this year.
Oh, okay.
He is a black enrolled agent. Okay. And then I think he had to start a new page because his other one got shut down. But there are some legitimate people, but then, if you missed the earlier episode, I got a letter for someone commended me for calling out Candy Valentino, but they never signed it, so I don't know who actually. Man, I still saved the letter, man. Almost thought it was like an alphabet crime content for Beverly Hills Cop.
Oh my goodness.
Yeah.
So, okay, so like you said, if you're going to do a vehicle, it has to be based on business usage, which means, whatever you do through the end of the year would count for this year. But keep in mind, if that changes significantly going into next year, that could present some challenges for you. If your business usage drops, let's say from 90% to 50%, you start to get yourself into some potential issues. So just some things to kind of keep in mind and think about in relation to buying a vehicle.
You may want to wait till January. So, and honestly, with inventory, it might be, unless you know what car you want and you can find it, you may have to wait till early next year.
Yeah, inventory is definitely crazy.
Inventory is really challenging.
I saw a post on Twitter, I think it was, someone was looking at a Dodge Ram truck. Mm-hmm. It was $100,000 sticker, but there was a $50,000 market adjustment on top of that.
Oh, heck no.
And I was like, are you kidding me right now? That's insane.
You can buy a Mercedes vehicle.
Right. So $150,000 for a truck. Like, whoa, no thank you.
Walk away.
Yeah, let's be smart.
Close the wallet and back away.
Let's be smart with our decisions on this.
Yeah, 50% market adjustment. Wow.
Yeah, and always keep in mind.
Man, we're in the wrong business.
Always keep in mind as well, when you're doing a deduction like that, you're not saving that entire amount that you're spending. So you're still losing out on some of the funds that you are spending that money on. Okay, because you only get that deduction times your tax rate as a tax savings. Okay, so always something to keep in mind as well, which is why, like he said, I don't recommend buying expenses and buying vehicles and doing other crazy stuff like that unless you actually need it. Okay, if you need something for your business and you were already planning on getting it anyways in the next couple months,
now you got to remember, like I have clients, for instance, I have clients that are high-end realtors. Mm-hmm. Some of them I know it would actually make sense to get a car between $50,000 to $75,000 because San Diego is an extremely competitive market, and like Agassi said, image is everything. If you're just a luxury real estate, I don't want to mean nothing personal. I don't want to see my realtor's going to sell me a $3 million home. I don't want to see them in a rusted up Honda Accord. That
I agree.
Yeah. That's kind of a bad look.
It is.
But someone like me, with some of the high net worth clients, I have to, I dip my toe in some of these expensive cars sometimes.
Hey,
it doesn't look right. I'm charging a big bill and I'm driving around in a Kia Optima.
So if you're planning on getting expensive, if you were planning on buying something for your business anyways in the next couple of months, and you wanted to kind of push it forward and do it before the end of the year, that's perfectly fine. Just don't go out crazy and buy a bunch of stuff. And also keep in mind as well, the most you could prepay for expenses is 1 year. Okay, you can't go any further than that. Otherwise, the deduction is going to be disallowed anyways. So also.
I can't pay for 2 years office rent. Damn.
No, you can't.
Darn it.
You can pay for a year, but not 2 years.
They let you deduct for 12 months, so I could pay for 12 months office rent.
You could, yeah.
Shoot, I may need to do that. Wait, never mind. I don't want to give expensive on my money.
Exactly. It doesn't necessarily.
Sorry, expensive. First Space, I'll give First Space my money.
I would never pay your rent a year in advance. It's crazy.
Yeah.
All right. Let's talk about some other stuff. So paying your kids. All right. So I talk about this strategy quite a bit.
Yes.
Something that is a powerful tool to save some money.
Yes.
Because it saves the parent money on their taxes.
Yes.
And depending on how much you're paying the kid, it's tax-free to them for both payroll taxes and income taxes.
Correct.
As long as you're paying them the right way.
Right. You do it the right way, and you can use it to, I see more and more parents send their kids to private school. So if they're appropriate age, they have real responsibility, you can basically write off your, private school tuition, college tuition this way.
Yep.
It's really powerful tool. Hey, those of you that like to go on Instagram, you should look at Grant Cardone's video. Nate sent it to me the other day.
Oh yeah.
On the contract with his daughter. It's really cute, but it has a lot of good lessons, and I recommend you watch it. I watched it. I was laughing hard.
Yeah.
But it's a really good video, and Grant also does it he loves his daughter, but he's also doing it for tax write-off, giving his daughter a $30,000 check.
Absolutely.
Yeah.
But the interesting thing about that was, what did he make her do with the $30,000?
Invest it in real estate.
In his fund, basically, for real estate. So she's going to be making money off of that investment, and that's the money that he told her that she can go and spend and do what she wants with it. So I thought that was a pretty good.
I know. I got to invest in real estate so that I can start spending on cars.
So yeah, that was a pretty good video.
Yeah, it was really powerful.
But yeah, so definitely make sure you pay your kids before the end of the year if they've done any work for your business. If you're not sure how to do it correctly, please consult with someone, because if you do it wrong, it doesn't end up working for you at all. So let's make sure we're doing it the smart way. And then also, you don't have to do it right away, but you have until April 15th to basically put some money into a Roth IRA for the child as well.
Ooh.
If they have earned income for this year. Okay. Even if it's not earned income from your business, it could be earned income from anything: babysitting, working at McDonald's, if they're an older kid that can get like a real job. So educating them on putting the money away into
Roth. They didn't have Roth. They didn't have Roth when we were kids.
That's correct. Yeah.
Yeah, because it came out in the late 90s, right? Under President Clinton.
Well, I think it was around when I was, because you're a little bit older than me, so I think it was just coming in when I was in high school.
It was under President Clinton.
Yeah, I believe so. Yeah, somewhere around there. Yeah, somewhere around there. So
yeah.
All right. Let's see what else do we got here. Tax loss harvesting. So this is one you probably are pretty familiar with. Do you want to talk about that?
I'll let you talk about it.
Let me talk about it.
Well, you're the RIA guy, man.
Well, this doesn't have to do with IRAs. This has to do with just
RIA.
Tax.
No.
RIA.
Yeah, you're the self-directed guy.
Anyways. All right. So tax loss harvesting. If you have a taxable brokerage account, with some stocks and whatnot, let's say, especially right now with the stock market being a little bit down, if you have some losers that you don't think will rebound that quickly, you can definitely sell some of those at a loss. Wait 30 days, and then if you wanted to, you can go ahead and rebuy them.
Wash sale.
Yeah, to kind of avoid that wash sale rule. But yeah, I think that's a great tool to get yourself some capital gain losses, whether it's short term or long term. Either way, it could potentially help you out and help offset any other potential realized gains that you have for the year. So
it's crazy, but in crypto, you don't have to wait that long.
Yeah, crypto is actually down quite a bit right now. So.
I know. I need to go put some money in now. Like, wow, it's cheap.
Exactly. If you're
excuse me, quote, quote, cheap. It's still not cheap, but this might be a good time to put a couple thousand Ethereum and Bitcoin.
Yeah, there's some of them that are down like 40-50%.
Yeah, they're not staying down forever.
So
it's going to be a rebound coming.
So they're going to shoot back up eventually, and you want to be. If you like investing in cryptos, you definitely want to be in on that. So. Putting some more money in before the end of the year could make sense.
Yeah.
Okay.
That's something I need to do.
Also selling and again taking some of those loss harvesting on some of those could be beneficial.
Yeah, and you could rebuy immediately. There's no because Congress said they won't really change the rules till 2024. So, that's what's interesting about crypto that I think scares some of the traditional people. Like, you can name your gain or loss if you know what you're doing.
Yep. Exactly.
Yeah. Enjoy your freedom, crypto folks. Trust me, I'm getting in before they make it harder too. Don't shoot a gift horse in the mouth.
Let me see what else is on my list. Last thing on my list is health reimbursement arrangements.
You have until the end of the year to reimburse yourself. Yeah.
Basically, yeah. So if you have an HRA and health reimbursement arrangement through your business, again, this is assuming you have it set up properly. You have until the end of the year to go ahead and make those reimbursements through your business for any medical expenses you had for the year. So make sure you get that done. So that you get credit for that and can save yourself on taxes for that business activity.
Yeah, get that deduction and get some money for some holiday jingle, I guess, right?
That's right.
So what are you doing for Christmas? Since this is our last episode, people are kind of curious. What is Ignatius Jackson gonna do?
I have no idea. Haven't decided yet.
Are you staying around here?
Maybe. Okay. I don't know.
Well, I'm gonna be in South Florida, and what I have to decide is which year-end party I'm going to in Miami this year. There's several. There's some that you can pay a couple hundred, some you can pay a couple thousand. Man, but I look forward to seeing my family. And last year, in Florida, I didn't even go to Miami because the virus was so bad, and my parents were older. I didn't want to go down there and then possibly pass something along. But please be safe this holiday season. Use good judgment, and then make sure that you take time to contact people that you love and care about, because somebody in your circle is probably going to be lonely this holiday season. Holiday season stuff for people who've lost family members, single people. I'm a single guy, so sometimes the holidays can be tough for me. But it's better than being with the unruly lady. Sorry, single ladies, it's the truth what I'm saying. But it could be a challenging time, and the last, oh gosh, what is it? Since March 2020, so what, 18, 21 months? It's been a really trying time. Check on your friends and family. Make sure to enjoy yourself a little bit. And hopefully in 2022, we can get somewhat close to normal. I hope someday you don't have to wear a mask at the airport.
Wouldn't that be glorious?
That's my New Year's wish.
I can't wait for that to happen.
I know, because it's impacted my decisions. Because, for instance, I could have stayed out here, borrowed your, you have monitors that I could have worked here a couple of days and then flown straight to Florida, but I don't want to wear a mask for 6 hours. So stopping back home, I could have stayed out here, done some work, and because you met my business partners on the ERC thing, because we have some things we got to do. But I
hear you, man. I hear you. It sucks.
And, oh, by the way, don't forget, if you did spend on some of those PPE for COVID supplies, you can't write it off on your business this year. They announced that earlier this year. That's
a good point.
So whenever I buy a mask for flying, I get to deduct it for business since it's a law.
Absolutely. All right, anything else? Any other last minute reminders?
No, and then make sure those of you like basketball, don't forget to watch basketball games on Christmas Day. The Phoenix Suns host the Golden State Warriors.
That is correct.
That's a big game.
It is.
I hope you go to it.
I'm not going to. I sold my tickets.
Oh, you're probably a smarter man for avoid the traffic that day.
Well, not only that, I made a pretty penny off of it. So
there, you got yourself a Christmas gift.
Exactly. But the Cardinals are playing on Christmas Day, so maybe I'll go catch that game. We'll see.
Oh, they're playing at University of Phoenix? Oh, nice.
They're playing Indianapolis.
Okay, well, Kyler Murray is considered the greatest high school football player in the state of Texas ever.
Really?
Yeah.
That's interesting.
Yeah, you should look him up, his numbers in high school. He didn't lose. He did not lose a game. He did not lose a game in high school at all.
Really? That's impressive.
No, he did not.
That's impressive.
Yeah.
I did not know that. Huh.
Yeah.
Well, there you go. Well, all right. Well, thanks everybody for tuning in. It's been another episode of CPA Huddle here live in Phoenix, Arizona, with my co-host Eric Pierre, and I'm Ignatius L. Jackson, CPA. And we will talk to you later.
Later.
See you in 2022. Bye.